What's up guys, my name is Titulo Timothy, also known as TeamFX. Welcome to my YouTube channel. Please, if you haven't subscribed, kindly hit the subscribe button and also the notification bell to get notified when we release new videos. Thank you. So today we'll be looking at how to draw Fibonacci retracement. I've gotten a lot of complaints about people being unable to draw their Fibonacci retracement levels. So this video is going to be helping us out on how to draw Fibonacci retracement levels. So we'll be citing two currencies, two currency pairs, EURGBP and GBPJPY. The EURGBP is for an uptrend, while the GBPJPY is for a downtrend. But before we proceed, I would love to expatiate on the definition of Fibonacci retracement. Fibonacci retracement levels are horizontal lines that indicate the possible support and resistance levels where price could potentially reverse direction. The first thing you should know about the Fibonacci tool is that it works best when the market is trending. So this means that the Fibonacci retracement doesn't work well when the market is consolidating or ranging. So the idea is to go long, that's to buy, on a retracement at Fibonacci support level when the market is trending up. So we have the pullback and the rally. For an uptrend, you buy at pullback, while for a downtrend, you sell at rally. So, and to go short or sell on a retracement at Fibonacci resistance level when the market is trending down. So Fibonacci retracement levels are considered predictive technical indicators since they attempt to identify where price may be in the future. So let us go to our graph. Okay, now this is our graph. We'll be citing for an uptrend first and we'll go for a downtrend later. For an uptrend, we'll be using EURGBP, that's EURGBP. So we can see that this is an uptrend. The market is coming. A double bottom happened there. So you know, once a double bottom happens, there will be an uptrend. So this is an uptrend. We will now bring our Fibonacci tool. I'm using tradingview.com. It's a platform where you can use to do your technical analysis. It's a free platform actually, but if you want to pay for it, there are other plans where you can pay for. So these are Fibonacci retracements. We click on it. Now before you draw your Fibonacci retracement, there are things you must know. You first identify the lowest point of the price. Okay, let's say we are considering this place here. We are just considering this box here. So for us to be able to draw a Fibonacci retracement, we must know the lowest point, which is this place here. This is the lowest point. This is the lowest point, and the highest point so far is around either of these two. So this is the lowest and this is the highest. So Fibonacci retracement levels are drawn for an uptrend, is drawn from the lowest price to the highest price, while for a downtrend is drawn from the highest price to the lowest price. Okay, so let me clear this. So as I've said, we are assuming the price starting from here. So we want to draw it to see how it looks like. So pick our Fibonacci tool here. This is the lowest price. Where there are ways at which you can draw the Fibonacci retracement. We can either draw it from here straight to this highest price, or we'll draw it step by step. That's drawing it from here first, then dropping it here, then picking another one from here to this point. So it's the option 2 we are going to be going with. So let's start from here. Let's draw it from here, the lowest point. We stop here. Stop here. Okay, highest point. So what they do notice, these are the Fibonacci levels I use. I use the 100%, the 76.4%, the 61.8%, the 50%, the 38.2%, and the 0%. So it's just left for you to identify the ones that works best for you. Actually, some forex traders don't use the 76.4%. I decide to use it. So if you look at this was an uptrend. It was going on an uptrend, then it came down. Another thing is that the Fibonacci retracement levels help you to identify the support and the resistance. if you don't know about the support and resistance yet, you have to watch the previous video. We released support and resistance for Euro USD and for gold. So it's important for you to watch it so that you have a clear understanding of what support and resistance is. So it's an uptrend here. It's coming here. It came down here. Then this 38.2% Fibonacci level, the price tends to behave there because this price, the buyers and the sellers were indecisive whether to push the market up or to bring the market down. So that's why the body of these candlesticks are very small, unlike the rest. So peradventure, the sellers momentum was stronger than that of the buyers. The price now broke below this 38.2% Fibonacci level, then came down to this 50% Fibonacci level. Now this is it. Some people would think since the price came up here and reached this price and came down here, let's assume that we haven't seen this. Okay, let's assume that we haven't seen these graphs that are here. So just assume that this is the current market price. So some people will see that since it came here, then it's going to come down. It's like a reversal pattern. So it's going to look something like this. It's a come here, come here, come here, then come down. That's what some people actually forecast. But so far I've been using Fibonacci retracement, and I was able to realize that this 50% Fibonacci level, it is very important. If the price should break below this 50% Fibonacci level and another candlestick, which is the confirmation candlestick, appears and breaks below the 61.8% Fibonacci level, there is every high tendency that the market is going on a reversal pattern. So it will look like what I just drew here, just this and this. Okay, let me clean this. So as I've said before at the beginning of the video, I said for an uptrend we'll buy at pullback, and for a downtrend we'll sell at rally. So let me draw that out so that it will be easy for us to understand. For an uptrend, it look like this. Come down here, go up there again. Okay, so this is how it looks like for an uptrend, and this point here is called rally. This point here, so it's pullback, buy at pullback. So okay, so this point here is the pullback. So on an uptrend you buy at this point so that you take a profit up, your stop loss will be below. So this line here is just what is happening on the current graph. It's just like this. Come here, come here, come here, come here, then boom. Have you seen? They're almost the same. It's just the same pattern. So as I was saying, the 50% Fibonacci level is very important. I use it a whole lot and it helps me. So the price was unable to break below the 50% Fibonacci level, and another candlestick was unable to touch this 61.8% Fibonacci level. So this is just like a retracement. It's not a reversal. There's a difference between retracement and reversal. So it went up here, came here, then went back up. It continued its uptrend. So because of that, we are going to buy at this point. At this point here, we'll buy at this point here. Then our stop loss will be below the previous Fibonacci retracement level, which is 61.8%. So our stop loss will be around there. Our stop loss will be around there. Then our take profit, we'll use our Fibonacci extension to determine our take profit. We'll be releasing another video especially for Fibonacci extension because we don't want to make this video to be unnecessarily long. So your take profit or target profit will be around up here or here or here. To be around here or this point here. So either of the two. So let's proceed. So since we've already determined this and market broke through this, we have to shift this vertical line. We have to shift it away to the current price now, which is this point here. So we now have to shift our Fibonacci level. You know, it was from here to here we drew it before, so we have to shift it now. We have to shift it so that the highest point will be here, and we have to shift the lowest point so that the lowest point will be here. So let's shift it. Lowest point here, highest point here. Wow, that was a double top. It's a double top rather. So there is a double top here, which is evident that it will be a downtrend next. But before that, it is important for you that before you place a trade, do not just use Fibonacci. Please do not just use Fibonacci to enter a trade. At least add more other indicators, add other tools to help you to know that yes, this trade is 100% or it close to 100% guaranteed. So let's add our trend line. We can draw trend line from here to, okay, this is good. We can just draw it here to this point. So I think I can delete this, it's not needed any longer. Okay, so, and I can delete this. So before we go to the trend line, let's look at the Fibonacci that we drew. This is the lowest price and this was the highest price. So we have to draw a Fibonacci from the lowest price to the highest price. So the price came here, came here, came here. It just bounced off the 61.8% level, then came down. Ideally, assuming it was only the Fibonacci retracement level we're using, we would have gone short here. That's why I said you should try to add other indicators other than the Fibonacci retracement level. So because this was a bearish candlestick, an obvious bearish candlestick, and it closed below the 61.8% Fibonacci level, so an aggressive trader would have sold at this point, but by adventure the market went inverse and an aggressive trader would have made losses. So that's the importance of adding another indicator. That's why I added this trend line. So this trend line helped us to know that the price was not breaking below, but it was still bouncing on top of it. So the Fibonacci level, it came here, this bearish candlestick appeared, then all of a sudden the next candlestick was a bullish. That's why I usually say it's best for you to wait for a confirmation candlestick before you proceed. So it came here, then this is the resistance, this is our latest resistance, and around this price is our support. So the price was just coming here, bouncing at this 61.8% Fibonacci level, going up. So it is every tendency, because this is a double top already, there's every tendency that this price is still going to come down to the 61.8% Fibonacci level or the 100% Fibonacci level. Okay, so that's it. And if you look at this 38.2% Fibonacci level, from here like this, from here to this point here, this 38.2% Fibonacci level and the 61.8% Fibonacci level formed the resistance and support respectively. So the price was able to break off here. It just was a false breakout. It came down, bounced here, came up here, came down, and like that. Then all of a sudden it came up to this point. So this 0% Fibonacci level was now our new resistance. So it came down to the 61.8 support, then went up again. So it is everything else is going to come down again. So is either it breaks through this box, which is a 61.8% Fibonacci level, or it goes back up and breaks through the 0% Fibonacci level, which signifies continuation of an uptrend. So since we are done with this uptrend, it's time for us to go for a downtrend. And for the downtrend, we'll be considering GBPJPY currency pair for the downtrend. Okay, so this is for the downtrend. We are considering GBPJPY for the downtrend, as I've said before. So for the downtrend, you sell at rally. So just like the way I drew for an uptrend, let me draw for this downtrend as well. So it's something like this. Sorry. Okay, it's something like this. It came here, click it, went through to this point, and came down to this point. Okay, so this was, assuming we've drawn our Fibonacci level to appear something like this, something like this. So this is a downtrend. This is the rally. You sell at rally. Let me add it in text. So rally. So if there was a downtrend and it retraced to this point, that point at which it retraced to, that's the point at which you sell. Your stop loss will be here, your take profits will be down here. Okay, let me clean it so that we'll be able to draw Fibonacci levels. Okay, please pardon me, I have a running trade, that's why this will be there. I don't want to erase it. Okay, so let's take our Fibonacci retracement level to draw. Remember, I said if you want to draw your Fibonacci level, you would identify the highest point. This is the highest point on this current graph, and this is the lowest point on this current graph. Okay, sorry. Okay, so this is the highest point, this is the lowest point. So as I've said in the previous uptrend for EURGBP, we are going to first draw it step by step. So let's cancel this. Let's cancel this. This is for the step-by-step procedure. This is the highest price. This is the lowest price. Then we're going to bring down the Fibonacci retracement level again. We'll redraw it because the price have extended to this point. So this will not be our highest price. This will not be our lowest price. So let's go. So you click it. There was a double top here. Are you seeing a double top? This one and this one. So a double top, you know, after a double top we have a downtrend. So let's first draw this. Sorry. Okay. We are taking this to be our highest point and this to be our lowest point. So let's examine these. We saw that the price, this 100% formed the resistance, of course, and this down 50% formed the support. Now there was a downtrend. It came here, bounced off the 61.8% Fibonacci level, went back to the 76.4, came down. It consolidated around this point, consolidated, and came back to the 61.8% Fibonacci level. Now came down to this 50% Fibonacci level. Now ideally, as like the image I drew, the line I drew earlier, is it makes the graph to look something like this. 1, 2, 3, and 4. So this is a downtrend. As I've said, you sell at rally. This is our rally here. Our 61.8% is the rally. So we should have sold at this point. Assuming we've sold at this point, then our profit will be at this point. But if you're using your Fibonacci extension level, you can still go further to choose your profit around this price, this candlestick here. But I will be releasing another video, as I've said, for Fibonacci extension to know when to take your profit and to leave the market. So assuming we've gone short at this point, we would have taken our profit here. Very quick one, and this is a 1 hour time frame. 1 hour time frame. So now that we've determined that, we saw that the market still went down and broke through this 38.2%. So we have to draw our new Fibonacci level, and since the price has already changed as well, so the previous one we stopped here. So let's take this price as our highest price, and this one to be our lowest price. Let me shift the graph. Okay, so this is it. So this was the highest price here, and this was the lowest price. The market came down, the price came down from 100% Fibonacci level, broke through the 76.4 Fibonacci level, came down. It was looking as if it's going to come down just straight up, but it retraced a bit to this point, then later came down. So drawing the line that I drew earlier is to look something like this, like this, like this. Came up here, came up here, came down at last. So from this diagram, it is obvious that this is the point at which we are going to sell. That's the rally. So we are going to sell at this point, then take our profit down here. So you saw that the price, this was the resistance, it came down, you broke through the 76.4% Fibonacci retracement level, then came down, a pin bar was formed here. You know, when a pin bar is formed in a downtrend, that's like a reversal. But since it was a huge down trend, the reversal is just for a short while. So the reversal just came here, was unable to touch the 61.8% Fibonacci level. It came down, broke through the 38.2% Fibonacci level, then came down to this point, which was the lowest point. So I'm going to still explain why I drew this line there. I've been observing the GBP JPY ever since, and on the 4-hour time frame, I saw that this was the lowest time. This is the lowest price it has attained so far. So that was why I drew this line here. So it's just like serving as the support on the 4-hour time frame. So it's also helpful on the 1-hour time frame. So it came up here. So this line, the prices were finding it difficult to break through and come below. So it just broke through. That was the first breakout and went back into the line, which is above the support. So it came down here. So this price is expected that this price will either hit the 50% Fibonacci level and come down, or it hit the 50% Fibonacci level and goes up to 61.8 Fibonacci level. And if it should surpass anything that makes it surpass the 61.8 Fibonacci level, it means that's a reversal pattern, so an option is evident. So if it should break through this price 61.8, if it should break through the 61.8, this is 61.8 here. So if you should break through it, you see that the previous lower high. So you see that the previous lower high, this one is taller than it, so it means that's a reversal pattern. Ideally, it was a continuation of a downtrend, it will look something like this. But if it's a reversal pattern that is trying to change its trend, that is, since it was coming on a downtrend, it wants to reverse, it will now be up. So now I'll be going up like this, then come to this point, retest here, and then come up like this. This is like a reversal pattern. This one is taller than this one is shorter than this, so this is like a reversal pattern. So I hope with this video we've been able to know how to draw a Fibonacci retracement level. And if you have any complaints, you can feel free to drop it in the comment section, where we're going to look at it and answer you in swift time. Thanks for your time, really appreciate it.